Hi, I'm Tom Lydon in Hollywood, Florida at the Inside ETF conference here with Simeon Hyman, who's head of investment strategy at ProShares, and ASO, who's managing director of global research and design at S&P Dow Jones Indices. Great seeing you folks.
Good to see you.
So we want to get right into it, and we want to talk about Dividend Aristocrat stocks and ETFs. So what's the investment case for this?
The investment case is that these are the securities that have consistently paid or increased the dividend for the last 25 consecutive years. That's a very long time when you think about that. And that means that they are a special bunch with very solid balance sheet.
So what are the characteristics, I know you spent a lot of time on this, but how do they look compared to the rest of the universe?
In general, S&P 500 Dividend Aristocrats, not only they outperform S&P 500, but they do that with lower volatility. So when you look at that over 28 years or 30 years investment horizon, they have higher risk-adjusted returns than S&P 500, and they have lower beta to the market as well.
So compare those in general to those that don't have dividends, or those that cut the dividends, or those that maybe just keep the same dividend and don't increase it. What does that mean?
What that means is those that don't pay the dividends or those that cut, they do not do well on risk-adjusted basis versus the market. And also they have higher beta to the market. That means when the market is going down, these securities, these companies are going to go down more than the market. And like the aristocrats that have beta of 0.8 to the market.
Okay, and Simeon, ProShares works closely with S&P and on this premise and created a suite of Dividend Aristocrats ETFs. Walk us through those.
That's right. Your ticker NOBL, Noble, in keeping with the aristocrat theme, is our S&P 500 Dividend Aristocrats ETF, and ticker REGL is the mid-cap S&P 400 Dividend Aristocrats, following the indices that S&P has crafted.
Yeah, and you also have small, is that correct?
We do indeed. Ticker SMDV is our small cap dividend grower as well.
Okay. International.
International, ticker EFAD, which is our MSCI developed dividend grower, and EMDV in emerging markets.
So you can take this dividend growth strategy and apply it to different asset classes, both domestically and outside the U.S. And again, you're known as the SPIVA diva in the industry, which is a very honorable title because that means you're looking at data all the time. There's so many people in this industry that come to you and come to S&P and say, hey, we have a theory, can you validate it? And knowing all the numbers, you will come forward and to say whether that's true or not. So it's great to have the authority here behind it, and then also a creative ETF company that can take advantage of this segment of the marketplace that has done so well. Talk to us a little bit, Simeon, about advisors' adoption of Dividend Aristocrat strategy.
It's really been taking off, Tom. Part of it is just the ease of explaining it to clients. There's nothing easier to say than, hey, this is an ETF filled with companies that have consistently grown their dividends. And especially for folks who maybe are coming from using active mutual funds and active management in the past, this is a great place to go because you're not saying that there's no opportunity to outperform the market, but what we're saying is a good rules-based and systematic approach, like following and investing in companies that have consistently grown their dividends, is simply a better way to identify outperforming companies.
Well, having you together is a great example of partnership in success in the ETF space. So thanks so much for grabbing some time with me.
Thank you.
Thank you,
Tom.